The markets like that inflation data we got today. It's Wednesday, March the 12th, and this is Markets with Megan. If you like this podcast, please subscribe, hit that alarm bell, or share it with friends, family, and colleagues. But let's dig into the economic data that we got today on the inflation front. This is called the Consumer Price Index, and we've been weighting this data as well as some other data this week to get us a better gauge of where we are from inflation. The inflation data today came in a little bit better than expected. On a year-over-year level, the headline rate is rising 2.8%, and that's slightly better than last month's 3% on a year-over-year level. At the core level, which excludes the energy and food prices, these are volatile items, that grew 3.1%, better than the 3.3% we saw last year on an annual basis. So what does all this mean? This is good data. It's one inflation data point. We'll have producer price index tomorrow. The Fed will like this data, but it's not exactly where the Fed wants it to be yet. When you look and break apart these details, you'll see that, first of all, some of the areas of the economy where we're seeing the consumer spending, we're starting to see them weaken a bit. We're looking at airline fares that were down 4% just over the month. And this echoes some comments from airline CEOs where they're seeing softening in demand. That's a pullback in consumer spending. We're also looking at vehicles, which declined as well. So vehicle prices are down. This, again, is softer demand from the consumer. So these things are good. This is a good sign because sometimes the cure for high prices is high prices. Eventually, the consumers will say no. And what we're seeing is that in some of those travel and as we mentioned, transportation prices. Now, where we're still seeing some inflation pressures continue to be in the housing data, so owner's equivalent rent, which makes up a large portion of this index. That grew 0.3% and is growing 4.4% on a year-over-year basis. Food prices, a little elevated. They were up 0.2% for the month, still growing over 2% at 2.6% on a year-over-year basis. So these are things that are still straining the consumer. And these are also some of the sticky things like services growing 0.3% or up 4.1% on a year-over-year basis. These are some of the things the Fed's watching very closely because it's difficult for them to control this. Okay, this is one inflation data. We'll get some more tomorrow. But one of the other things that's kept a lot of volatility in this equity market continues to be this back and forth with the tariffs. We've got some retaliatory measures today. We have some White House pressure again. So we'll be back this week with, if we need to, an impact report if there's more bigger market moves. But right now, the focus today is on the inflation. The focus the rest of this week will be also on some of the other inflation indicators. That's all we have today. If you'd like a history of our podcast, you go to marketswithmegan.fm. Thank you.